Kitco News special coverage of the Future Blockchain Summit is brought to you by Cook Finance, a revolution in DeFi asset management.
I'm here with Michael So. He is the VP of Business Development at Cook Finance. Michael, welcome to the show.
Thank you for having me.
Welcome to Kitco. Yeah, pleasure to have you. Thank you for sponsoring our program.
Of course.
It's a pleasure to have you. You are very knowledgeable. You have a traditional finance background, but now you're working in the DeFi space. You graduated from Cornell Economics, did engineering too. You worked in traditional finance and banking, trading. You worked with credit default swaps, derivatives. So you were very intimate with the risk profile of a lot of derivatives products that are very similar to actually what's going on right now in the latest developments in DeFi. So DeFi financial products are basically a new asset class. Let's explore that. But first, let's explain what is DeFi and what is CeFi, and we'll talk about the most prominent points of differentiation between the two.
Absolutely, absolutely. So number one, thank you for having me. Great to be here, excited to be here in Dubai this week, especially with the crowd, the energy behind us. So in decentralized finance, it actually stands for decentralized finance for DeFi, and obviously CeFi means centralized finance. The major differences can be bucketed into three areas, such as how the asset is being parked between the two different sides. For example, in DeFi, you don't necessarily have to park your assets within the custodians or the institutions. You actually will house the asset yourself within, such as a smart wallet, a wallet such as MetaMask, where you can completely control your assets. And secondly, within DeFi, the defining difference is that there's also something called the where you have the value of transfer that actually happens between your assets. Within DeFi spaces, what actually happens is that the value of transfer, for example, on some of the more popular protocol like Uniswap, they actually happen on the Ethereum network. But if you were to look at the CeFi space, a lot of times they actually would happen within the institutions, within a crypto centralized exchange, or maybe within the bank trading structure itself. And last but not least, if you were to look at the organizational structure of a decentralized finance firm, they usually would have something called a DAO, where they stand for the decentralized autonomous organization, and they make decisions very differently than that of, let's say, for example, a bank, where it is sometimes made by the corporate decisions, committee, CEO, all the way top down to the bottom level. But for a DeFi structure, a lot of times it's decided by the community, voted through all the decisions proposed by the community, eventually implemented by the actual protocol team in a technology way. So that's in a nutshell, how they're different.
In a DAO structure, the votes are still counted depending on how much you've invested, right? Exactly. So it's kind of like a company. Your amount of shares you have directly proportional to the amount of voting rights you have.
Right. Yes and no. Right. On one hand, as we have just mentioned, the tokens, if we will, right, were actually called governance token. And a lot of times, as the name suggested, they are used for the governance of the entire organization. What happens all the time is that, a lot of the smaller decisions that would be typically made at a traditional exchanges, centralized exchanges, bank trading structure, will be made from just a department head or maybe even up to the board level, but not exactly, by actually the stakeholders, right? But in a decentralized finance, the stakeholders are actually the token holders who actually use the tokens for a specific purpose of making decisions as to what the organization actually will do.
So given that this is an educational segment, you told me offline that you started learning about this space by watching YouTube. We'll touch on that later at the end of the interview. But help us educate the people watching right now. I want to just start from the very beginning here. What is DeFi?
Right.
Give us some examples.
Exactly. So one of the more defining moments in DeFi was actually the DeFi summer, that happened in 2020. I was fortunate enough, to attend one of the events by Hayden Adams, who is the CEO, I should say, the leader, at Uniswap. At that time, it was an extremely simple demo. I mean, in almost a more techy way, they simply demo, how an application completely accessible by the internet can be connected to what we call the wallet, which is such as MetaMask, and you're able to directly exchange value, if you will, call that one token, with someone else on the Ethereum network, just from this user interface, right? And that's the eye-opening event for me, because for the first time, I can see how there is no counterparty in between one users versus the other, but it is rather a direct exchange of value between the two sides. Yet at the same time, I can completely trust the governing, so-called smart contract that actually governs, how things work.
Wait, so in traditional finance, when you're working with a swap, for example, there's significant counterparty risk in some instances. You're saying in DeFi swaps products, you don't have any counterparty risk? How is that possible?
Yeah, it's almost completely removed away.
Yeah, explain how that happens.
Right, absolutely. I mean, the way it works is that, a smart contract, oftentimes, when you exchange values, it's able to encumber your underlying assets. So let's say, for example, you have Ethereum, or call that a red Bitcoin, right? Yeah. So if you were to do something with it, say on the Uniswap side, you provide liquidity, Uniswap would actually, smart contract, encumber the two assets that as a pair that you provided, and will provide you with a receipt as to, as number one, as a proof on the fact that you have provided the assets. Right. But on top of that, you're able to also hold that receipt in your wallet in a way such that controlling your assets completely without losing, without being what we call hypothecated or maybe posted away, in some other ways, by anyone else, So at all times, you are in control of your assets, not having to worry about somebody running away from you, with those assets, And that's how it is different from, let's say, the traditional finance side. Traditional finance, maybe more like the CeFi way, oftentimes, may take some time to settle, the trading or I should say the exchange of values, between the two sides. And because of that, you often have to trust the institutions to basically transact, and make sure everything is settled, by the end of the transaction. That time itself, basically define the risk that you're exposed to, to the counterparty itself.
With the reduction of counterparty risk and all these other efficiencies that you've mentioned, how do all these things affect value? I mean, one of the basic tenets of finance is that nothing is free. If you reduce risk, you should have lower risk premium. Tell me about the value of these DeFi products.
That's a great question. It's almost, I had an interest rate background, so I can kind of tie that back into how interest rate works, and especially, along with the fact that, counterparty risk is an integral part of that calculation. What's happening is that, even if I were to give you something overnight, right? If I were to exchange value with you directly and knowing that smart contract will protect me, so to speak, from you having to running away, I don't have to worry about that. Then in that case, I simply have to judge my so-called reward versus the opportunity cost of what I actually lose away from an opportunity perspective. But in a centralized finance way, what's happening is that not only do I have to worry about the opportunity cost, I also have to worry about if there's any risk of you running away, right, in this case. And that's actually what we always call, even overnight, called the overnight risk. Yes. And overnight risk will actually tie back into what we call the overnight rates, right, which is very common amounts, in the old ways, the banks that provide LIBOR structure. And that's actually what defines the interest rate curve. The longer you go, the higher the rate is, because the more risk you're exposed to. But now, since it is completely taken away from a smart contract perspective, right, if, let's say, for example, I happen to want to arbitrage everything within one single transaction, and I can basically prove this to the smart contract, similar to the RFA flash loan, flash loan, basically, allowing you to spot the opportunity, provide you with the funding, and be able to give you all the funding you need in one single transaction and close it at the same time, then it becomes a fee structure rather than a curve structure due to the fact that the duration is gone, and that's revolutionizing the entire industry. It actually changes the whole concept of what finance is all about at this point, because it used to be just the provider, the funding, being provided, but now it's more like you simply providing a service rather than providing, the actual resources,
Are you saying DeFi financial products are immune to interest rate sensitivity?
Yeah, to a very large degree, because when you actually think about it today, right, interest rates in the traditional finance world, in the fiat terms, right, oftentimes really controlled by the supply and demand of money, right? Yeah. Now, the supply and demand of money, as we know, let's say from all the major currencies, oftentimes obviously centrally decided, and we as stakeholders have no really say in exactly how much money supply will be produced in the future.
Well, that changes entirely the way you value a product. I mean, you take a structured product from the DeFi space, how do traders determine the value?
Yeah. So what's happening is that I often say this, in a cryptocurrency, say the likes of Bitcoin, what's happening is that the supply of Bitcoin is fixed, and now the reason why it may be going up or down is due to how the market perceives Bitcoin in terms of value relative to the fiat side, where the supply keeps changing. So it's not exactly where Bitcoin is actually going up, but rather oftentimes it's actually the fiat currency that's being depreciated. And we sense it in the relative terms how Bitcoin is actually appreciating at the same time.
So let's talk about applications for, actually starting with the financial institutions. So how are the big financial institutions adopting this technology? Do you see derivatives desks starting to adopt DeFi now?
Yeah. And the answer is yes. Last time when I read a chain analysis report, I've seen that half of the volume traded on decentralized finance, the ecosystem, actually consists of mostly wallets being $10 million plus. So I would not exactly say they're the main street folks, who are trading DeFi, I mean, accounting for half of those volumes, but rather at a minimum being pro-tail, if not already, what you would call a crypto hedge fund, or maybe institutions already, So that's one way they're already participating. But the other way is that, I can see how, slowly but surely, they will adopt to the fact that, counterparty risk is being slowly removed from the entire system, and they will have to adapt to the fact that, the business model will have to show how they're still being value added in this world of counterparty risk being removed, alongside with the fact that things are being faster on blockchain.
Right, okay. Give us an example of a DeFi protocol that investors or traders should follow.
Yeah, absolutely. Today, the market leader is Uniswap. They are basically what we call a spot exchange. But alongside with that, lately, DYDX, being the perpetual the protocol, allowing traders to basically leverage the positions, take a view on the position, but still using the existing collateral in terms of cryptocurrency to post to the account. And be able to basically get the upside, as you say, the risk reward profile that they actually are looking for. Those are the two ones that I actively follow. But alongside with that industry, we also, as Cook Finance ourselves, think that index, or I should say like asset management on DeFi, is bound to happen very similar to the way centralized finance has evolved over time.
Do you see the DeFi space eventually not challenged, but come to the same size as the global bond market, for example?
Yeah, that would be a very interesting movement, but I can see that happening. If you were to actually look around the world,
Of course, we have to give them back, but the bond market is many, many times bigger than the global stock markets. So it's the largest traded market in the world.
Absolutely. A bond market, I myself, came from a fixed income, background. I believe, it's upwards of $20 trillion.
What did you trade, by the way?
I traded structured rates, interest rate derivatives, alongside with the fact that the hedges, actually U.S. Treasuries, alongside with many different, fixed income products.
Which firms were you at?
I was with a number of firms, HSBC, Bank of America, Greenwich Capital at the time, which became RBS, Scotiabank, fellow Canadian banks, I got pretty much involved in every single aspect of interest rates, all the way from the basic vanilla swap to the structured rates,
Yeah, so it's not impossible that these desks in 30 years' time could all be trading DeFi products?
I can see that, and I think the market has already accelerated this so-called evolution, if you will, right? They have already adopted a lot of the traditional finance instruments structure into the DeFi product, but also adapt that to the user base who are looking for the advantages that DeFi provide.
Okay, tell us about how Cook Finance fits into this picture.
Absolutely. So Cook Finance, we are what we call the DeFi asset management platform. In one sentence, we basically help folks basically bundle a bunch of underlying tokens into a digital receipt that allows them, to basically save a lot of transaction costs, save a lot of hassles for getting, multiple tokens, in one single transaction. Number one, we recognize the fact that, cryptocurrency, along with the DeFi ecosystem, may not be the most easily understood, ecosystem out there. Yeah. But we have helped them basically by providing one very simple UI, allowing them to basically connect the wallet, be able to get into a more like a portfolio structure of investment.
What's your target audience?
We actually target quite a lot of folks. First of all, it's actually the main street folks. We want to help them, make it easier for them, to get into many different tokens without having to pick horses, if you will, right? But secondly, we also want to make sure that the market can be provided with more liquidity, such that when these folks comes on as a crowd, and when they get into a package, a lot of times there's more demand driven for these underlying products. But on the other side, on the flip side, obviously somebody will have to provide liquidity. So we also cater to institutions, the Wall Street of the crypto, if you will, to cater to these folks such that the liquidity can provide it. But last but not least, we understand there's an intrinsic value difference, at all times, due to market trading structure, how the so-called portfolio or the package, can be traded differently than the underlying tokens. So in that sense, we also have DApp, what we call decentralized applications, features that allows these arbitrage opportunities, to be realized easily by both the Main Street folks and the Wall Street folks.
All right, finally, let's close off on education. I'm guessing when you were at Cornell, DeFi didn't even exist at the time.
No.
How did you learn so much?
Yeah, it's a pure coincidence, right? I actually was sitting right behind the Barclays crypto research team, when I was there. And I got very interested. I obviously heard a lot about it, over different social media. Eventually, I went on YouTube myself, just like everybody else would, just to learn about what cryptocurrency is all about. Learn about what a distributed ledger it is, what a so-called distributed consensus are, and how basically there's a lack of central authority around this structure. And it actually provided an eye-opening event for me to learn about how this whole financial markets or instruments can evolve over time. And then later on I went into different websites, but mostly on YouTube, just like anyone else.
Coming in from the CeFi space, actually, coming in from the CeFi world, which is where you were before, you didn't look at this space and think to yourself, this is some sort of like internet fad, it's some sort of scam, I don't want to partake in this. Did you ever have that thought?
Absolutely. As a matter of fact, when I had my own company, many years ago, 2013 actually, that was when I first heard of Bitcoin. I started my own company considering going into the cryptocurrency swim lane, if you will. But eventually I dropped that idea. I thought, oh my God, what is this, right? In hindsight, probably the biggest mistake in my life. But at the same time, I don't think I missed the boat. It is only evolving at this point, and it can only continue to grow larger at this point.
Okay, and what made you change your mind? What made you realize, okay, this is a legitimate area of finance we should pursue?
Yeah, it's the very fact that people are finally in control of their own assets for the very first time, without having to worry about any institutions in between. Not that they are wrong, it's just that it is a new way, a novel way for people to control.
But institutions can come in between by providing large volumes of trading, liquidity, so they could actually take over the DeFi space like they took over CeFi many, many years ago, right? In the same fashion, could they not?
Yes and no. I think they can provide a lot of the volume, in the space, but at the same time, I think the crowd is also equally large. And like we said before, in terms of a DeFi governance structure, a lot of times, the stakeholders being, maybe a much smaller fish, than the big fish, the Wall Street are, they actually get a lot of say as to how decisions are made.
But let's say at the JP Morgan crypto desk or the Bank of America crypto desk comes in and basically overwhelms a certain protocol by being the majority stakeholder. Is that not the same thing?
I don't think they can do that. Similar to how Bitcoin, even though today may be held by a lot of the larger wallet holders, still you and I still have equal access to Bitcoin, just like anyone else would, on the openly traded market. So I found that very revolutionary due to the fact that and for the first time, everyone is sort of on the same level playing field.
Yes. Okay. All right. Are you at all concerned about institutions potentially manipulating the price by being larger stakeholders?
Yeah. So far, we haven't observed that. And the fact that ETF was recently approved, in the U.S. For Bitcoin, kind of as a testament to them, right? It's the fact that no single entity in the world can easily control the price of Bitcoin. And I guess from a consumer protection perspective, that is very reassuring. That knowing that it takes basically the entire global community to come together to provide consensus to a transaction, and not having to worry about any so-called like misbooking or any manipulation or any fraudulent
except
activities.
Elon Musk's tweets.
Exactly. That's one which is always interesting. To see the crowd how they react.
Yeah, people talk about that as being an example, but the same thing happens in the CeFi space as well. You got influencers pushing down, pushing up penny stocks. But anyway, interesting conversation, Michael. I want to thank you so much for being here.
Thank you. Great having you.
And thank you for watching Kitco News. We'll have more for you. Stay tuned.
Kitco News special coverage of the Future Blockchain Summit is brought to you by Cook Finance, a revolution in DeFi asset management.